Meet Sophia. She's 32, working as a junior project manager and earning $54,000 a year. On the surface, she's doing everything right, paying her rent on time and staying on top of her bills. But because she lives in a cycle of monthly payments, her $4,500 monthly gross income feels much smaller than it actually is. Sophia is carrying a combined debt load of $39,000. It's split between $18,000 in credit card debt, $21,000 in student loans, and she recently took on a modest car payment. She isn't reckless, she's just operating within a system that has made debt a permanent part of her lifestyle. Now, meet Emma. She's 41 and earns a similar $59,000 a year. While their salaries are within $5,000 of each other, their financial realities are worlds apart. 3 years ago, Emma made her final debt payment. Since then, her net worth has grown more in 36 months than it did in the previous decade. Today, we are analyzing the math of these two lives, the invisible debt tax Sophia is paying, and the massive wealth gap that opens between them. To understand why Sophia feels like she can't get ahead, we have to look at her monthly cash flow. Her debt isn't just a balance, it's a monthly obligation. Credit cards. She pays $450 a month. At an average 22% APR, about $330 of that is pure interest. She's paying $330 every month just to avoid falling further behind. Student loans, $230 a month at 6%. Car payment, $350 a month. Total monthly debt obligation, $1,030. Here's the math Sophia hasn't run. If she were debt-free today and invested that $1,030 a month into a low-cost S&P 500 index fund at an 8% historical return, she would have $187,000 in 10 years, $606,000 in 20 years. By servicing the past, Sophia isn't just losing $1,000 a month, she is forfeiting a $600,000 future. Over the remaining life of these loans, she will pay approximately $15,600 in total interest. That is the debt tax, money that could have been a house down payment or a travel fund. But instead, it's gone before it ever hits her pocket. Emma escaped this trap by using the debt avalanche method. She focused every extra dollar on her highest interest credit cards first. By being strategic, she saved herself nearly $4,000 in interest compared to just paying the minimums. When Emma's last payment cleared, she suddenly had $1,050 in freed cash flow. Here's how she deployed it. 1. The safety net. She topped off her emergency fund to cover 6 months of living expenses. 2. The employer. Match. She maximized her 401k contribution to get the full company match, an immediate 100% return on her investment. 3. The Roth IRA. She began contributing $583 a month, $7,000 per year, to her Roth IRA. This money grows completely tax-free. 4. The brokerage. The remaining $400 a month goes into a taxable brokerage account. By consistently investing that $983 a month at 8%, Emma is on track to have $578,000 in 20 years. Emma didn't need a six-figure salary, she just needed to stop paying interest and start earning it. The difference between Sophia and Emma isn't just a spreadsheet. Studies show that eliminating debt leads to a 25% drop in clinical anxiety. Sophia has to stay in her current job, even if she's unhappy, because she needs that $54,000 to cover her $1,030 in monthly payments. Her debt is a career constraint. Emma, however, has dropped her survival floor. Because she has no mandatory debt payments, she could actually live on much less if she wanted to take a sabbatical or switch to a lower-paying, more fulfilling career. The gap between Sophia and Emma starts small, but in 20 years, it becomes a $500,000 difference. If you are in Sophia's shoes, the first step is to reclaim your income. 1. Find the extra. Even adding $150 a month to a credit card balance can save you thousands in interest and cut years off your timeline. 2. Choose a strategy. Use the Avalanche for the math or the Snowball for the psychological win of closing small accounts. 3. Intentional redirect. The moment an account hits zero, that money needs a new home, the IRA, or the 401k before it disappears into lifestyle creep. Which path are you on today? Are you paying the debt tax or are you building the armor? Tell us your debt-free target year in the comments. This is Digiphoton. Subscribe to decode the math of your life and build a future that is as wealthy as you deserve. Build the wealth, but keep the memories.